Good afternoon, traders. This is Christian from RSP Trade Group, and this is your end of day as well as end of week market recap for Friday, August 23rd. Happy Friday, everybody! And what a way to end the week! Holy cow! Look at the only major red on the screen. Two areas that you probably want to see come down a little bit after last week's move. Yesterday's move was the VIX, which was down 9.5% today, and the dollar. Moving down 0.9%. And, that kind of, to me, feels like risk on for equities when you have the dollar do what it did this week, which was a decent move down. Risk disclaimer in front of you, everything that I'm going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. So, Powell comes out and does a little bit of a surprise to basically say that that they are going to start cutting interest rates. So, as Fed chief more confident inflation on sustainable path to 2%. Fed doesn't seek welcomes further cooling in the labor market. So, further, obviously, in his whole speech, and so this is where we are, and this is what Fed fund futures are now pricing in terms of next meeting isn't for a little bit less than a month away, September 18th. The market didn't really change here. Still implying, if you look in this column, it will basically tell you what the market or what Fed fund futures are pricing in terms of whether or not what the current market is predicting in terms of a cut. So right now we're at 33 basis points, so we're still closer to 25. I mean, at one point, I think a couple of weeks ago, this went up to about 39 basis points. So the market has kind of gotten accustomed to that. Most likely, it's going to be 25 basis points cut, and then of course, some cuts thereafter. And for now, it's kind of seemed like Powell's on that schedule too, that they're going to start to normalize those interest rates and bring them down. And there's clearly what I hear a lot of the times is, well, once this happens, it could be buy the rumor, sell the news once it actually happens. That's true, but also I think it depends on what stocks. I think you could see a sell the news event, but I think it could be areas that have been kind of like comfort zone area stocks. And I would point to the Magnificent Seven, or I call them the Great Eight because I add Tesla in there too, or I add Netflix, whichever one they don't include, I add in there. But, I think those might be a little bit more vulnerable of that trade, whereas I think there's going to be other trades that are catch up. So, and I think that's kind of, when you look at the what the market did today, overall a strong day. Q's still finished up 1% for the day, but really didn't make any move over the course of today's trading session. It was pretty choppy. So again, a lot of that was just a gap up in the overnight session, which again, by the way, if you go back to yesterday's price action, that this is just how it's been working lately, is that we see these one day of price action where it's just kind of ugly and but it just seems like someone has to do a lot of selling, but it only ends up being one day. And it's funny because there's just no risk appetite that day. And I'm referring again to yesterday. But if you kind of just, look at the, which is kind of what I did yesterday, looking at the market dynamics and looking at the overall breadth and understanding that one day is not a trend, right? It's really hasn't been those days to get really that worried. But it just, we are going to have these reversal days from time to time, and it's important to watch support. But also, if we really started to see breadth break down, then it would be a cause for concern. But I just kind of chalked it up yesterday to a bad day, and then right then and there, the market rallies overnight again. So the takeaway that I come back to with this is that there's going to be these minor pullbacks for now until something changes. And also just the overnight moves for some areas of the market are really pretty large, right? And again, buying the close and selling the open has been historically a very good trade because a lot of these gains are made in the overnight market. So I want to talk about, of course, look at the green here that happened in IWM, and so I'm going to just review a couple charts here, and this of course is the S&P. you know, again, like back and forth price action this week, and the market did, you know, S&P did finish up for the week, and I think that that's overall pretty good. But it wasn't where the strong performance was. And so first of all, I just wanted to highlight, because I've been highlighting the last couple of days, right? This is RSP. This is the equally weighted S&P 500. I've been going over this frequently, so I'm going to keep going. Like, I'm not going to go into that great detail because I been breaking it down on a day-by-day situation. But to me, it just shows that it just goes back to the argument that I mentioned, is that that shift away from the Magnificent Seven into lots of other areas of the market is pretty robust, and this is out to new highs. And look at the performance for this today, you know, and for the week, you know. So again, no bias in an equally weighted an equally weighted ETF. Everything is just about equal, versus, you know, Apple, Microsoft, you know, Google, you know, being the top weights in SPY, or or even S&P futures, which is market cap weighted. Right. Another thing too, right? You know, I put together this in my Substack note. If you're not subscribing to it, I would, because part of it is free. You know, and if you pay a small amount of money, you could see what my open positions are, and you could see what our watch list is, right? And so many other things. But at least, like, you could sign up for free, and which the address, I'm going to do a quick little plug here, is just ttgtrading.substack.com. Right. And you know, again, it's free. I actually put out quite a bit of notes, but I make them all very short. Like, my goal of the Substack is so that you can kind of get, it's not like a trading, like, you're not going to get like that many signals, although I do include charts of any new positions that I get into. But it's more for you just to kind of peruse through in 30 seconds and get a really good glimpse of what the market is doing. Right. So for example, one of the things that I've gotten a lot of nice feedback on is I put in the 4-week new highs versus new lows, and I sort them too, so that you could see like what areas are breaking out. And I do it I don't do 52 weeks, I do 4 weeks, so that you can kind of find new trends. But you know, what this is giving me of a glimpse of today and this week has been that there's just a lot of participation. And you probably can't see the sectors. You don't have to look at, whoops, I guess I can't zoom in here, but it's not to look at all the, you know, the individual names, but, you know, take a look. There's a good look at consumer. Now, the way that there's consumer services and discretionary and staples, but overall, and I never really like the classification, you know, because I think some names that are in staples should be in discretionary, like a Costco, for example. But in any event, I'll move on from that. There's financials, there's healthcare, right? It's pretty diverse in terms, you know, real estate, which is REITs, also has been pretty strong. And then look at the new 4-week lows today. There's none. So, you know, and again, that's been the story. You know, not as many names as that are on the new high list. That hasn't been the story all week. But what has been the story is that there really hasn't been any new 4-week new lows are not picking up. So it's good to see this, because I talked about in yesterday's video that there's a little bit of a divergence, as we're not seeing that many names break out. But I would give it a little bit of time. And what's encouraging is that you're just not seeing, there's none. Right. Usually at least there's a handful of names. So I do find that very interesting. And again, you can, you know, if you sign up for this, you'll get the free version of this, and you can see that on a daily basis. All right, let's just get back to, because I want to talk a little bit about this. I talked about the equally weighted ETF. So here's the small caps, and you know, really nice move. You know, I was really paying attention to this all week long, because price was butting up against the bottom of the August value area all week long. And sometimes, for technicals, the more that you test something, the odds are price is going to break in. If it's just one time and it gets rejected, okay, that's sometimes like, hey, you know, really the sellers went out there, and you hit resistance. But if you keep trying and keep trying and keep trying, usually there's a breakthrough, and that's basically what we had. Now, what's more interesting, so again, like, this was the start of the move, and again, you know, for those that think, so I always try to put to bed like misconceptions. Like, people sometimes say, oh, the economic, it doesn't matter on Fed days. It doesn't, I just watch the price action, which I do too. But I am very cognizant of when there's an important economic data point that comes out, or when there's a Fed speech, even though sometimes I think there's not much that's going to come. Like today, I didn't think that Powell was going to say anything new. So he kind of surprised me a little bit that he came out and said something. But it doesn't matter if some of the economics is old news. Market participants are doing something, right? And they're the ones, especially the institutions, drive the market. And you could laugh at them and say, hey, this is, you're buying on old news or whatever, but it is what it is, because the largest move that happened in the IWM came off of a CPI report, and then it just continued to ramp. So the biggest move happened on economic data. Now, again, you might want to disagree with that, and that's fine, but look at the volume that happened, right? And a lot of this was short covering, because there was a big short position in the Russell futures. So yes, it is important to pay attention to the economic data, some of it, right? Like the CPI report, because market institutions who are going to drive the market more than the little guy or girl are going to make these big decisions, and are going to make big moves. So just like you got today, right? And so again, like that's one of the misconceptions, because I hear that from time to time. Oh, it doesn't matter, it's all data. It matters because people are making decisions off of that old data for whatever reason. I don't agree with it, but it is what it is. So where this gets more interesting, I think, I talked about in the beginning of this video about the Qs. Well, if you look at this ratio, and I actually went long this ratio because I think it's very interesting, and it's even more pronounced because sometimes when you have a change like this, where, in this sense that we have some confirmation that they're going to be cutting, or that they should be cutting interest rates in September, right? Sometimes it's not just everything goes up. It's a rotation out of some things and a rotation into other things. So I think that this is at a very compelling spot. And I did this today. I went long IWM and I shorted some Qs versus it, right? And now I'm just playing the ratio. And that's just one trade that I have on, but I like being short a little bit something too. It kind of gives me a little bit of a buffer in case there's going to be more rotation out of that magnificent 7. All right. Now, will I hold that into next week's report of NVIDIA? I may not, because NVIDIA, it's an unknown event, right? For earnings next week, which is on Wednesday, if they crush it, right, then probably all the semis are going to probably, start to move again, and some of the other AI stocks. So you got to be cognizant of your risk. Always, right? You always want to be aware of events that could cause the market to move. Here's what the SMH ETF looks like, right? I believe it had a positive week, but still interesting. It's not above the 50-day moving average. So again, it is not resumed that market leadership, right? There's other areas of the market that are actually doing better, even though there's certainly big swings that are going on. And I did that, I think, in yesterday's video. I illustrated the week changes in the semiconductor ETF. So it's a great trading vehicle. Right now, it's just below that 50-day moving average, and it's one of the few sectors or groups that are below its 50-day moving average. When you look at sectors, right, and this just flipped like a little while ago, because for a while tech was not above all these moving averages. But look at this. There's only energy, semis. Retail should be coded green. So there's a little bit of a mistake there, but it's one of the few groups that are not above the 50-day moving average. So very interesting. But again, who could change the tone in that? It's this little company called NVIDIA that reports next week. So that's going to be very interesting. And we'll talk more about that next week. But for now, I think that the IWM trade is very interesting. Obviously, the home builders had a big move. You get them right back to where they were basically about a month ago, and really strong. And I think what will need to happen for this trade to continue is, what we're seeing in interest rates. And, again, the Fed controls the overnight rate, right? That's the shortest interest rate out there. But look at what's going on in the SHI ETF, right? This is 1 to 3 years, right? So this has been ramping up. And again, it looks much different when you go, people think interest rates with the Fed, they automatically go to TLT. But TLT looks much different than, to me anyway, or a little bit different, I should say, than what some of the shorter duration bond ETFs look like. This is IEF, which is 7 to 10 years as well, right? So all of these are starting to kind of have turned the corner and are heading higher, which again, lower interest rates, generally better for home buildership. And this was an ETF that I haven't looked at in a while, but I looked at it today and went long this today. This is the mortgage real estate ETF. So again, different than REITs. If you look at what's in this ETF, and I covered this earlier in the midday video, but I'm just going to rehash this just a bit. But it's a little bit top heavy, a couple names, but it's companies that do a mortgage origination and refinancing. So those are some names, you can go through this list. NLY and AGNC are top heavy. They're about 20. Those two names make up about 26% of the ETF. But it makes sense to me that you're going to see more of either refinancing or maybe more velocity in the movement of home buying. And today, new home sales did tick higher today too, 739 versus 630K, and the previous month was also revised up a bit. So that move in interest rate is getting people to kind of move a little bit, possibly selling a house, maybe upgrading, and doing a whole bunch of other things too. I also think when you look at some of the other companies like in a firm, I think this looks very interesting at this point. This did break above its value area. Again, this is a buy now, pay later type situation, but it kind of goes hand in hand a little bit with some of the other trades. Lending Club had a nice move today too. This broke out to new highs, right? And then things like Zillow, a little bit not as direct as a home builder. Redfin had a huge day today too. It's kind of a short squeeze. Notice that closed right at the top of the value area. Going through a couple of names that I talked about this week, right? Upstart continuing to work well. I'm targeting this 44.31 level. Right. And this is what the weekly chart looks like. Looks to me just very compelling. Right. What about car companies? Right. Well, Carvana has been just an absolute beast this year. That's a new high for Carvana this year, breaking out and rolling higher. I also really like this name. Nobody ever talks about this name, but this is Car Gurus, right? Also breaking higher as well. What about Bitcoin? I put on a Bitcoin trade earlier in the week. That was one of the things that did not participate last week. Well, it participated this week, right? And I got long 2 days ago, had a little bit of an inside day yesterday, and look at the candle today. So again, still not the cleanest looking chart. It's kind of sideways. So this is just kind of playing a range, right? And maybe can move up to maybe the point of control, right? Because it does have a pattern here of lower highs. So you got to be careful about names that are not breaking out. Names that are in a range, you've got to be really picky about where you're taking your targets, as well as ultimately taking the trade-off. And there's a couple names that I find interesting in this group. First of which is CoreZ. It did just barely break its value area. This is a smaller cap name, right? That's 1067. All right, so I'm going to keep it, so very nice week. I want to talk a little bit about, so by the way, here's our watch list for the week, pretty good. Another trade that I put on, the power trade worked very nicely. Not the biggest move in the world, but I don't mind having a couple slower movers along with some faster movers in my portfolio. And by the way, congratulations to Kava holders. Holy cow. What a move on earnings. Gapped up and just kept going. And look at the volume today in Kava. Amazing. Sweet Green had a nice day today. Shack had a decent day today. Right. And I went long Wing. I went long Wingstop. I had an alert on this. I like that this looked like an inverted head and shoulders, left shoulder, head, right shoulder, neckline, break higher. And I'm just targeting this virgin point of control. I'll probably take the majority of the position off there and see how it handles that virgin point of control. But essentially, that's what I'm targeting. Let's get to the weekly performance. So a positive week for the markets, right? SPY up 1.4%, diamonds up the same. The small caps had that big outperformance. The Qs underperformed, but still positive for the week, up 1%. International areas, look at EFA did really well. I think that's because of Japan. Japan has a big weighting in this international developed ETF. TLT was up, GLD just barely positive for the week. Bitcoin was up 6.6% for the week, and the dollar down 1.6%. And actually, somewhat surprising, value outperformed growth this week. The VTV ETF was up 1.6%. And if you look at the small cap one too, which is right over here on my spreadsheet, was up 3 points. The small cap value was up 3.7%. And again, I didn't even talk about the banks here. Again, I could spend another 15, 20 minutes talking about things here, but look at the banks, break higher. Right. And I mentioned this earlier in the week. I said, what do you think the financials are going to do here? Literally, I think a day or 2 days ago, I tweeted out the chart. Well, there's your new high in XLF. One of my favorites out of this kind of financial or insurance, whatever you want to call Berkshire Hathaway, but also it is a big weight in the XLF, so it's going to look kind of similar, but I really like that break to new highs, and that's a name that I'm long as well. All right, guys, that is it for the weekend. Have a wonderful weekend. It's the week of the Travers up at Saratoga. Should be a wonderful race on Sunday, and hope to see you guys in the trading room. All right, guys, have a great weekend, and I'll see you on Monday.